All right. Good morning, everybody. Welcome back. Hope you're having yourselves a fantastic start to your Wednesday morning here and are feeling sharp, feeling refreshed, feeling ready to go, and are excited about today's trading day. Certainly think that it's going to be another weird and funky session, right? Markets seem to be dealing with the news or the narratives better overnight than they are in the morning, and we need to be a little bit. I think the right term is deliberate, right here this morning, and really be like no excuses, right, for being sloppy or anything along those lines, right? I think when markets get to these types of environments where they're kind of like a relentless grind, the easy thing to want to fall for, right, is those subpar trades or those like almost good enough trades just so you can justify kind of catching what you perceive to be the move of the day. And I think compromising on those things when you get those kind of grind days really makes it easy to then compromise, right, on pretty much every other element of your trading. So want to avoid that, right? I think that that's probably the most obvious roadblock here that I'd create for myself today. And I want to make sure that I'm being deliberate in how I attack that and then how I approach it. To kind of like build off of that, right? The thing that I liked about my trading there yesterday, right, was my ability to be rules kind of based, right, be really deliberate with my process, and took advantage of the market that was presented in front of me, even though I did leave a significant amount of money on the table, right. Yesterday had a really big win turn into a loss, and that's something that doesn't need to happen and shouldn't be happening. And I think that the reason why it is that once it starts to move in my direction, I haven't been very deliberate in defining what the new support is post breakout. So that's one thing I'm going to really try to focus on here once I'm actually in winning trades. Is probably once you're up like 1.5 R, 2 R type range to start to establish the zones where support needs to hold, and then look to basically look like survive weak pullbacks into it, right, or close strong pullbacks, right, that go through. So just to make sure that regardless, right, if I get to a certain point, there is no turning back and going red. It's better to finish green on that, right, instead of finishing with sort of a disappointing trade. The other element, right, and this is the first time I haven't done this in a what feels like forever. But yesterday was like the first time I almost like missed my exit on that capitulation low. Generally, I'm pretty good at taking or closing my trade once it starts to move a little bit faster than I expected. And yesterday was wild. I think how fast it moved, but also how like went from looking at it to uh, now not having a plan right within like 2 seconds. So one, to really make sure I'm always ready to get out of my trade, be it both in a positive context, right, and a negative context. And yeah, look to manage right that and make sure that that doesn't happen here again. When we do get that kind of grindy type move, that I think is a really likely type of reaction to price action. So just really making sure that the trigger finger, right, is kind of ready for that, and yeah, position for it, I think is going to make a big difference. So those are the things I really want to focus on here today. Right, continuing to be that rules based trader, really structured, and avoiding the almost, just kind of really taking advantage of the strongest action, and then really want to just be focusing on beefing up my plan for when I am in a trade. So, identifying areas of support that price action needs to hold, and then making sure that I'm not ignoring or skipping right those easy wins, because yesterday's PNL should have been doubled or tripled, and so feel kind of dumb, right, for leaving that much money on the table. All right. Besides that, right, all things considered, pretty good start to the week here, right? It's been a good process. We've had a relatively interesting market, so I would expect that interest to continue here. And the economic calendar is nothing too crazy. We've got crude oil inventories, who's and crude seems to certainly be the most like impacted here. Now with these inventories, I am not sure if they're going to reflect any of the economic turmoil, right, that's happening in the Middle East. But we'll cross that bridge when we get to it. So, good morning, everybody. Hope you're having a great start here. Yeah, quick out of the way, and let's get after it here. So, ES, same count as yesterday, right? 2 out of 3 to the upside here without volume. Strong green candle breaking out, and I mean, look, we're at all-time highs here. So an all-time high breakout, I mean, that's the starting point, right? That would very much be the definition of a squeeze type move after sort of the high capitulation volume there last Friday. So this would be very much the most interesting thing. Hey, good morning, Suresh. So we're just going to add, right, ATH breakout / failure is what we're looking for. So I think it was on Monday we talked a little bit, right, about where the most obvious spot would be for bears to step in and turn this like momentum upside down. It would be at all-time highs, right? That would be the most obvious spot. So that's where we're at. So we'd like to see that now turn into support, right, or for a pretty big volume breakout to occur through it. We're at 61.55, so we're going to be targeting 61.70 and beyond here this morning. And we'll go up towards like 60-30. Hey, good morning, Antonin. All right, and then to the downside here, right, it would be ORB fake out around ATH, and then a breakdown under. And realistically, right, if I'm going to be playing to the downside, I would like to see more volume than yesterday. So what that means, right, is that the open, hey, good morning, Eric, the open should be more enthusiastic, or it should be a little bit more aggressive to the bear side, right, than what we saw there yesterday, or like kind of a larger volume pace over the first like 30 minutes or so. So if things are like kind of steady but not crazy, that could also be that indication, right, of our personality shift here. So 61.55 here pre-market. We're going to be looking pre-market lows of 61.35. So I'm going to call that 61.40. And then we go 61.30. And then we've got it mapped out. Now, I don't think it's going to go down 100 points here to 60.50 or beyond. I would be pretty surprised by that, right? I think that'd be a pretty exaggerated move here today, but I'll save myself some prep later on in the week. All right, NQ. So same count, right? 2 out of 3 to the upside without volume. And we're looking for that all-time high breakout here again as well, right? Very similar story. We're actually at all-time highs here pre-market. So we're looking for that continuation, right? And turning those new areas of breakouts, right, into support. Or we'd like to see these pre-market breakouts turn into support. That's probably the better way of describing it. Hey, good morning. So we're looking at what, 22,500 here pre-market. So we'll go 22.7, weird voice crack, 22.7, then 23,000 kind of as our upper range. And we'll go up towards what, like 23.5. All right. And then to the downside here, right? ORB fake out at ATH, then breakdown. And we're looking for a move towards, let's see, pre-market lows of 22,400. All right, and then we got 22.2. That's a mouthful. Fantastic. All right. And then crude inside bar. Oh, sorry. 2 out of 3 to the downside without volume. Generally don't like to trade CL on inventories day. I think I made a bit of an exception to that last week. And we traded it fine, but this has still been a little bit of a chaotic market here. Huge volatility, crazy moves. And yeah, maybe that data, right, creates a pretty big trigger here. To the upside, we'd be looking for a move back up towards, say, 67.80. So we'll call that 68. And we're what, 65? So we'll call it 65.50, 66, 66.50. And then unlike yesterday, right, we don't have those same like limits that we have to be worried about. There are specific prop firm limits and market limits that sometimes we have to be aware of. We're not at that point. So for futures for prop firms, at least the vast majority of them will do a quote unquote trading halt at 5% down. So if the general market is down 5%, they won't allow you to open new trades under that 5% handle. And markets will do like a circuit breaker halt or a pause if they sell off 7% or more. And that's an exchange-based rule. So we've got a couple things to be worried about. We don't have to worry about that here today. That was yesterday's limiting factor on CL. But yeah, certainly something to always be aware of, especially if we get back to a very highly volatile market. All right, and then we got that map down towards like 62, 63. So that's plenty of space. Okay, Apple decreasing volume here by the looks of it. Gapping up, so 1 for 3 here to the downside again. Microsoft 2 out of 3 without volume. Yep, doesn't change. Tesla inside bar. Amazon 1 for, it's a 2 out of 3 without volume, and it's a weak one. All right, Nvidia 3 for 3 here to the upside, much better volume. Is this going to go back to it being a leading name and a sociopath? That'd be great. Hey, good morning. AMD 3 for 3. Meta 3 for 3. So actually we have quite a lot of like bullish breakout kind of conditions here so far today. More than I maybe expected. 2 out of 3 without volume. Google 1 for 3. And then VIX 17 handled. This I'm still struggling to understand a little bit. This doesn't feel like where it needs to be, but again, trade your plan and your market, not your not your feelings. The most important thing, right, when following your trades or following your trading plan, right, is that the first rule is that you have to always follow your rules, right? So, allowing your feelings to get in the way or allowing to get your perception of what the market should do to get in the way, generally not the most successful way to behave. All right. Any questions here, team? How's everyone feeling? No, when I'm looking at stocks here, I'm not looking to actually specifically day trade them. I'm looking at them just to understand the general makeup of the market, right? So I want to see how well the leading names are holding up or how poorly they are. And the more consistent the story I see kind of across the board, the easier it is for kind of some consistent narratives, right? And to be able to take advantage. Yeah, great question, Antonin. So next week is a weird one from a market perspective. We've got Canada Day here on the 1st, and then 4th of July there on Friday. Um, I would think that Monday is probably a pretty normal trading day. Tuesday will be pretty slow. Wednesday may be normal. Thursday probably pretty slow. Those would be my base expectations. So I was kind of tentatively planning to trade Monday, Tuesday, Wednesday, and then take Thursday, Friday off. Friday is an exchange market holiday anyway. So yeah, that would be the base idea there. I'll finalize that in the next maybe day or two, but I'm generally very bad at thinking about time off. Yeah, so I use this screen that you see here for all my charting, and then a second screen for all my executions. Yeah, no, I hear you. I probably should be more on top of it too, truth be told. But yeah, I would say like on spec, the volume that we're gonna get next week with Canada Day and 4th of July, it's setting us up right for it to be probably like uh more likely than not that it's a very very low volume week, right? Experience wise or historically, it tends to be like the second quietest week of the year, maybe the third quietest around Thanksgiving and around kind of the holiday period. um so yeah, I think i- if you have any plans or you're looking to travel, you're not going to miss out on anything. Unless, yeah, I mean, look, the caveat here is that things could kick off geopolitically and create a tremendous amount of volatility in a low volume environment, and those could be some pretty wicked fun conditions to trade. So, one point of pessimism, one point of optimism. So far, not a huge range, right? Across the board, kind of a small compressed day here. A little bit of a muted reaction to all-time highs. Now we are holding them, right? At least on NQ, which I think is positive. And ES, okay, we're a little bit underneath, so we'd like to see that turn a bit more into support. But looks fine. We're still just gonna have to be a little bit patient. That's more Powell speak here today. Honestly, slow, very slow start. I think one thing to take from yesterday as well I saw it a little bit last night. We saw similar to on Monday, we saw one side kind of fail dramatically before the real move happened, right? So Monday we had that really big opening range and then those like bullish engulfing candles post range and we got that big breakout. Yesterday we had kind of that like grind move higher, then that capitulation sell off back towards the opening range and then the continuation, right, for sort of the rest of the afternoon. I wonder if like almost that's like the indicator that it's the personality change to go from being like a fake out market to a maybe a bit more of a consistent market, like an intraday conditions swap type thing. But I think we've had two very obvious like personality changes intraday that have led to then the easiest trade of the day. So I guess like what I'm getting at a little bit here is maybe it's worth waiting, right, for that first like really aggressive failure. And good morning, Ian. Hope you're doing well. Almost like the mantra to adapt, right, in this kind of grindy type market is if it's not easy, you don't want it. So how can we make it easier for ourselves, right? The market's going to give us really obvious rejection scenarios, right, in either direction. I think that's a really good cue to like trigger the focus. Very, very slow. Don't think this is going to give me increasing volume here to the upside. Might. Again, if I'm looking at price action here so far, at least on the index level, it's hard to view this as anyone having a specific element of control here yet. Yeah, so decreasing volume on CL there on that 3 min. Yeah, so far so slow. 10 minutes in, kind of feels like I've been watching the market for longer than that already. It's a strange sensation. What was your setup, Nautilus? It looks like you're in good shape. But what was your setup? Yeah, so I use TradingView for my execution. I use separate execution screens for all my accounts. And I make sure that I am setting my stop loss manually, right? So I'm always putting in a hard stop loss price. And that's the first thing that I'm ticking when I'm entering a trade. So, I mean, this is worth discussing. So if I were to enter a trade right now, I'll just do this as a paper trade example, right? I don't want to risk any money on a setup that I don't believe in. But let's say that I was looking right for a long here, and I wanted my stop loss to be 22,515.15. I'm going long. Just clicking buy. First thing I'm doing, clicking stop loss, putting in my stop loss price. So in this situation, right, 22,515. And then from there, I'm picking my reference price that I want to basically gamify an entry towards. So in this situation, I think looking for an entry under the opening range high would make a lot of sense. So then what I'd be looking, right, is setting my price to be 529, right, 75. And then, okay, am I happy with this risk? No. Okay. Well, I'll go one contract then. And I know that if I go 529, it's going to be fine. Change this again back to 515. And now I'd be risking 295. All I'd be doing now, right, is waiting for price action to get under 529. Once it does, I'm clicking submit on my order. So now as I'm watching price pull back into my screen, all I'm doing here, or all I would be doing, right, is waiting for it to get under that blue reference price, and then I'm clicking buy. So that's my execution process, right? And then if you're going to execute a trade, you know, that would be the exact way to do it. So if I were to click submit here right now, or click this buy button at the bottom, I would be in a position. That makes sense? Yeah, I know. I still use it. Well, with TradingView, you get the concurrent data warning. So when you're logged in to on one screen and then you're executing it on another, if you're logged in on both, it cuts off the data between the two. So you like one screen will get data for 10 minutes, the other screen will get data for 10 minutes. So that's why I do it on a separate monitor, because I can be logged in on one side, not logged in on the other, and maintain my market data across the board. The main benefit, right, of having an extra monitor isn't really for the executions. It's for just being able to monitor more markets right at a time. So I can have ES and NQ and CL all visible right at all times, and kind of have a better picture or a better view over what the general market is doing. So that's the perk, right, of having more screens. I don't think it actually makes execution easier. It just allows it. And then from my perspective, right, because I'm streaming, I have one screen dedicated to that specifically, which is the screen that you see here. And so it just allows me to maintain my workflow a little bit cleaner. I mean, CL's giving you a breakout pushing towards 65.50. That would potentially be our starting point here. Instantly, we know it has to be the aggressive entry technique, right? Because we've made higher highs. And that 65.08 would be the reference price. So I want to take a little, just quick moment, right? Just to reflect here, make sure that price action is behaving how we expect, right? So we're back to watching it after nice confirmation. We know it's been a choppy, bouncy market. So being slow, right, in how I'm setting up this process. So like we said, right, stop loss would be 65.02. And we need a entry right under 65.14. Maybe being slow was the wrong call here. It's fine. I'll just pass on that burden of confirmation to a different time frame. Not a big deal. And if it's strong, it'll pull back too. Great volume though. And yeah, I still do have my Top Step X accounts, Igor. Okay, 30 seconds to go here. Might get a chance on this next candle. Interesting from the other indexes here a little bit. Starting to see maybe a sign of that early weakness. Now, not enough to call that a capitulation. Okay, biggest volume of the day. Not the strongest looking candle shape. That's a little bit better. Above 20 probably is ideal. They're still looking at the same setup. It closed at 20. Kind of a phantom close. Again, you'd want to see the pullback technique for now. I think if you're going to get the aggressive, you might struggle to get the risk reward. So again, we're looking pretty similar. Now, this 65.08 would still be best case scenario. I'm not 100% confident we're going to get a pullback into that price. I'm going to wait for that. I'm going to be more, or force myself to be really specific here. CL can be a little bit temperamental sometimes. Okay, watching. 65.08, right, would be the reference price. I'm looking for a move under that and seeing how calm, right, that pullback is. And I'd just be looking at 5 contracts here. So far, a good defense. Spreads widened, now 2 cents. Just be slow here. Be slow. That's far too fast of a move. So no entry on that, right? It went from 08 to 02 in like a second. No reason to click submit. Let's see if that ends up being now a fake out or if that's the capitulation move of the day. ES starting to break down here potentially. This could be in play. And NQ potentially could be in play here as well. under 500 on both of them. That's a pretty dramatic personality shift. CL, I'm going to wait. I want to understand why we didn't click submit there. Beautiful. Good. Okay, NQ, I don't know if I'm super enthusiastic about that fake out. Be a little bit concerning. ES looks better within that context. Now our target here would be 61.41. Stop loss would be 152.50 on the aggressive, or on the pullback technique it would be 158. For now, we're still looking at the pullback. Just to go back to that a little bit here, right? That's why I like to do that reference price. So the reference price gives me a spot where I want to see the correct reaction within. And if it's like an elevator underneath my reference price, not great, right? I don't want to see that. So it just gives me an extra, or it almost gives me like a reason to get focused on how I want to see price action react. And it allows me to maintain that focus for like a short spurt instead of being unspecific, right? And waiting, and talking myself into something. Okay, so we'd be looking for now, right? Pull back on ES. Stop loss would have to be 158. And we're going short this time, right? So we'd be looking at 2 contracts here at 154. Ideally, I'd like to see a deeper pullback than that, right? So I could justify a little bit more position sizing. Maybe kind of like around there would be reasonable. Another element here is maybe when you're really zoomed in, I'm not sure if I could call that outlier volume. This 5-min kind of tells me a bit of a different story too. I think the 5-min story is a little bit more believable, right? Where maybe the reality here is that it is a choppy market, right? We do know that. The 5-min is telling me a story of chop. The 3-min is telling me a story of potential trend, but it's a trend where the more that I look at it, I can acknowledge compromises, right? Like that isn't enough volume. So if that's telling me now it's outlier on the 5. Got sending out an SOS stuck in my head. I have no idea why. Got to be some sort of subliminal message, right? So fake out higher, fake out lower. Not quite equal move, but very close. Not enough volume there on CL to the downside. Although if that chart doesn't look like a middle finger, I don't know what does. And I think that was a pretty good read again. This would have stopped us out or been pushing it. Yeah, that might be the catalyst we need to kick things off here a little bit. Yeah, spot on. Good reminder, Rebecca. Again, see how we like above that blue line? It was basically just an elevator. Like we didn't really get any evidence of bears defending. No, I don't think so, Deb. I don't think you can predict market reaction to news. I've seen too many incredible earnings with strong guidances still somehow be sell-offs. Now there are people that have an edge trading news for sure, but I'm just not one of those people because I can never get it first, right? I think the edge in trading news is being the first or some of the first participants in that move. As a retail trader, I can't compete and play that game. Geez, this is some bullshit here. 15-minute. All right, 2 minutes. I'm not aiming for anything at the moment. I have no active setups or anything along those lines. So right now, I'm still waiting for the market to give me a good direction or to give me an easy narrative. I don't think I've seen an easy narrative here so far. I think I've been scared straight by the price action into putting my hands in my pockets. CL's the best looking setup here again, but I think my hesitation in trading it before inventories data is very justified. I think it's just gonna kind of waffle about until 10:30. Why does it have the incentive to make a move now? All right. And feel it's like the wrong thing to be right about. It's just a binary, right? So it's either outlier or it isn't. So above the white line is outlier, under the white line is not outlier. If you can't tell the difference, then it's not standing out enough. So it's kind of an on-off thing. I want to try to, when I have like rules for my trading, or I have like setup based rules, I want them to be specific enough so I don't have to apply too much analysis to it, right? Because that just opens up the opportunity for me to like talk myself into bad ones or talk myself out of bad or out of good ones. You want it to be easy enough that it's very repeatable. So as many trading rules as possible, you want them to be binary in mind, right? Yes, no statements. Is it a breakout? Okay, yes, no. How can you define that? Is it a reversal? Yes, no. How can you define that? Is it a change in momentum? Yes, no. How can you define that? So just the more consistent that process becomes, the easier it is to repeat it. And it's ultimately the consistency of repeating a process for years, right? That makes you that generational wealth. It's not, oh, I found one good setup and I can take advantage of it for 6 months. It's like the financial freedom of trading is the result of thousands of good decisions, of consistent decisions. So we have to make it easy to optimize for those things. That kind of makes sense. I'll take that as a yes. NQ might be back in business here. We got 40 seconds to go increasing and outlier. It's going to be close, be really close. Okay, there's increasing volume. I just want to see it poke its head up a little bit here. Yeah, so I can see some separation, but it's back up above 500, which probably isn't the story I want to see. I can talk myself off of that ledge. Ooh, high volume inside bar is disgusting. Hmm. Tell you what, so far, maybe we've not made any money here today, right? We've not placed any trades, but we've done a very good job not losing any money here. This is a very easy set of market conditions to lose your cool in. Yeah, they don't look great. These charts look like legitimately gross. Oh, me too, Jen. Me too. Sometimes you just gotta have a nice, relaxed day. Drink your coffee, watch the market, give your dog some belly rubs. Doesn't have to be complicated to be awesome. And yeah, like this is probably the best looking move on paper. I just uh yeah, I struggle with the data dropping in 22 minutes. Like I don't see the reason why like any big money would be jumping in yet. Too big of a gamble. Things considered as well. This has been a defense of all time highs, right? It's not been a super enthusiastic one, but the fact that we keep finding support here, maybe we get a little bit of a later morning breakout, kind of similar to what we had yesterday. Got to put my Livingston hat on. Hmm? Are Microsoft and Nvidia strong enough to bring the whole market up with it? The question. All right. That's dramatic. Yeah, we got to see this thing get to outlier here. That's going to be our struggle. If it doesn't happen, right, which I don't think it will. Pass on that burden here to the 5-min and see if it occurs there. Yes, not quite. We're getting closer. All right, I'm going to go fill up my coffee. I'll be right back. All right, still a minute to go here. NQ probably has the best chance of going outlier. All right, so if we get increasing, we'll be outlier. Let me close, and ideally we want it closing under here. Right, as close to 80 as possible. Or below, right? Like we're getting now. Oh, we have a chance here. We absolutely have a chance. Popping its head over. Okay, come on, close strong. And we'd be targeting 418. Okay, so for now, pullback technique would be an entry of 86 or better with a stop loss of what, like 505. So if it's a 505 stop loss, you need an entry above 90. I'd probably be looking at like a 95 along those lines. Aggressive entry technique, you might struggle a little bit. So you'd like to see a pullback here, 20 odd points. Probably push this to 400. Do it like this. And then you're risking 20 points there. And your reference price would be above 236. Or above that 236 line, right above that green line. This would be a one contract trade, right? It'd be 20 points of risk. So 20 times 20 equals 400. But we gotta wait here still. I'm not super confident that that's the right entry technique yet. If I can get a pullback here into like 95-ish, 90 or above, I'll be in good shape there. That would be more preferential. I might not just get that opportunity. Excuse me. Oof. That one woke me up. All right. So again, right, we'd be looking at least 490 here. Rather see a slightly deeper pullback than a very conservative one. Theoretically, right above 81, you'd be risking 25 points, right? So that would be within your max loss. But I think I could do better than that, right? So that would be my base expectation. And like we said, 506, 22, 506 would be the stop. Yeah, like I said, reference price about 95, give or take that area. And then we're just looking, yeah, we're looking to go short here. It'd be a short. Close. I saw a 94.75. I didn't quite see a 95, which would be ruthlessly cruel. Yeah, so this might set up, if you didn't get your entry there like me, this might be setting up then for another attempt with the aggressive on the next candle. Again, we still might get the pullbacks and still just an inside bar. Yeah, stop loss here would be 506 still. And if I missed my ideal entry, guys, I'm not chasing it, right? I'm not willing to like accept a compromise. So if it's strong, it'll give me another chance to enter. If it's not strong, okay, I saved myself some money and some stress. I win either way, right? I don't need to trick myself into losing money or changing my plan just because I'm craving an entry. That's not sustainable. Okay, so we're within striking distance here. Yes, at 150, lower low. Do this still. I could maybe still get away with that, but pullback technique is still preferred. Pullback technique in this situation is preferred because my actual risk would be smaller. Okay, so we're getting close here. Back to watching. This as is like $450 worth of risk. per contract. I'd like to still see that trimmed. Mhm. Okay, we're back in that 90 range. Let's watch. It's on 90 and then it's back down 5 points. So still no rush here. Yeah, I'll just fuckery after fuckery. Yeah, and just because my plan has almost come together doesn't mean that I'm now going to change it, right? To be able to like justify my thesis, right? Yeah, for now it's still only be a one contract play. Be risking, I mean, maybe at that 95 I could go 2 contracts. Right? Because you'd be risking $220 a contract. So that would be reasonable. But based on just how slow things have been here so far today and the lack of trending price action, it would be better to size down than to size up. Because I think fake out potential is still pretty strong. You want to maintain some mental capital here. Like it's a big letdown spot for the market, right? Where you've been waiting for this move to happen, and now maybe right it becomes less and less appealing. So this would now be it. You're looking at 22 points of risk approximately here. 20 points of risk. So it'd be one contract. Stop loss 494. Yeah, bad time to ask that question. The delay on YouTube is about 3 seconds. Why I tell you my price or my plan way before it ever happens, right? Yeah, this would be just a one contract play, guys, right? We have to be able to do the risk ourselves, right, team? So the difference between our blue line and our red line is 20 points. What's 20 times 20? Right? It's $400. So it's $400 more or less than your max loss number. If it's less, if you add 2 contracts, is that more or less than your max loss number? Right? Your risk management, your position sizing is a very selfish conversation you need to have with yourself. And we have to be making those decisions independently, right? If you want to feel stress free in your trades, you have to know and understand the risk of that decision. Is that clear? So like when we're entering a trade, guys, and we're filling it out, right? And I'm saying, okay, I'm looking short at 22,475 and the stop loss here of 22,494, right? Am I happy with this risk or am I not happy with this risk? I'm getting the number right here in my calculation, right? Yeah, that's why I'm not taking the trade, Deb. It didn't get the pullback reaction we wanted, and why I've been talking about this instead. So we need to be understanding, right? Are we happy with this number? Yes or no? If I'm not happy with this, I either look for a deeper pullback or I size down my trade. But we need to, each and every single one of us needs to be answering this question independently, right? Because that number is going to be different for all of us. Oh, I'm sorry. What was your entry price? So use the aggressive entry technique on, or use the pullback after it told you it was time for the aggressive. Maybe you might get lucky here, but that was the wrong technique to use. So does everyone understand, guys, right? How to figure out how much you're risking per trade? And does everyone have an idea in their head of what their max loss number is? Because I truth be told, cannot do. I can't calculate risk for all of you on every single trade, right? I simply can't do it. It's not going to be physically possible. So if you want to feel calm and good about your entries and about your position sizing and your risk management, that's the thing you have to be really focusing on. I don't have the ability to be able to do that for each of you. Now, I will tell you, right, my max risk that I'm willing to accept is about $500, right? And ideally less than that. That's the number I want per trade. So every entry, right? I'm looking, okay, am I risking $500? Or am I risking between 250 and $500? Yes. Okay. One contract. Am I risking less than $250? 2+, right? And I'll just keep playing with that, playing with that, playing with that until, right, I get the position sizing I want. That also stays within my max loss number. Hey, Deb, it looks like you're in great shape here. I would be very careful leaving those hanging orders, hanging limit orders going forward, right? It's a trade that's working out here well, but had the potential, right, to be a disaster as well. So our ability, guys, right, to understand the risks that we're accepting and that we're taking is a huge boost to your trading psychology, right? When we're deliberate with our position sizing, when we're accepting that, when we're making those decisions for ourselves, all of a sudden, right, we feel a lot calmer in our trades because we made a deliberate decision. Right? Just because I can handle $500 worth of risk doesn't mean that you can. Just because you can handle $1,500 worth of risk doesn't mean I can, right? So everyone has a different number and everyone has a different reaction to each number. Your objective here is to put your ego aside and to figure out what that number is. It's probably less than you think. And then to build up your skill and your tolerance so that you can increase that position sizing. So I think it was literally a week ago here today, right? We did the whole day talking about position sizing and entry timing and things like that. So if you want to really deep dive on those concepts, right, please go back and watch that stream. But yeah, guys, we have to all be thinking about our position sizing here, and we all have to understand how we get to that risk calculation, right? So I know I'm ranting and raving like this, like an absolute lunatic, but it is the most important thing, right? As a trader, it's the most important variable. When we keep that consistent and we keep that at a level where we can remain rational, we do very, very well. when we are inconsistent with that and we allow ourselves to size our trades to be emotional, right? We really struggle too. So ask yourself, right, what's my max loss number? And that, when I say mine, I don't mean Michael's, right? I mean yours individually. And be extremely selfish in defending that max loss. I think one of the things, right, that's we have to realize as traders, when I worked on a desk, I had a tremendous amount of support staff that would basically make my life easy, right? So I had a back office team that would handle any corporate actions or make sure that the orders that were submitted actually got executed. Like they would do, like they'd check sanity check, right? Basically all the things and get all the things kind of set up. We had risk management staff, right? That would be monitoring my trades intraday and making sure I didn't exceed certain like heart rate limits and certain like dollar limits, right? And then we had a tremendous amount of like quants who would tell me, right, okay, here's the direction that we're betting on the market. Here's we're doing whatever. So for each trader that was on the desk, there was probably 5 to 10 support staff, right? Depending on which markets you worked and how senior you were. So my job as a retail trader, right, is to basically put on those 5 to 10 different hats where people had full-time jobs to basically make sure I didn't fuck up. So now I have to wear all those hats as well and basically do all their work too to make sure that I can perform at a high level as a trader. So yeah, that's just the very basics, right? Like we had a chef on staff, so he'd make me food and it would be nutritious. I got to make sure I feed myself, right, with high quality ingredients and make sure that I'm not putting junk in my body. All right. We had a psychologist on staff or a performance coach, kind of like a Wendy Rhodes type, right? If you've seen Billions. So I got to make sure that I'm being proactive with my psychology, right? I'm speaking to professionals. I'm getting support. I'm getting coaching. I'm getting better, right? I'm asking for help. We had risk management teams, right? That would be monitoring your heart rate intraday. And if you exceeded a certain level or you had a spike in heart rate, right, they'd come tap you on the shoulder and get you to walk away for the day. And they put you in timeout. You go play Xbox. Right. So my job, as much as my job is to trade, my job is to also wear all those other hats. And I can avoid the psychologist. I can avoid the tap on the shoulder, right? I can avoid all of my kind of stressful reactions that would give those support staff things to do intraday by really understanding my position sizing and not taking it for granted. In my opinion, it's one of those things where you want to be proactive, not reactive, right? The more things that I can control here in the moment and be deliberate about in the moment means less problems for me on Thursday, right? Or on Friday or on Monday. Like one of my favorite analogies for this, right? And I know I keep ranting and raving about this, so I do apologize. But like if I were to do a renovation of my bathroom in my house and I just go to the contractor and say, hey man, I want a steam shower, I want new tiles, and I want a his and her sink. And then I just walk away and don't tell them anything else. Of course I'm gonna be surprised when the bill comes, right? Like, what the fuck? 20 grand? Like, what? No way. You were there for 2 days. This couldn't have taken so long. Right? You're going to be surprised. You're going to have a bad reaction. You're going to get annoyed. And you're not going to be very happy with the contractor. Right? But if you tell them, okay, I've got this budget. I want you to get this materials. You agree on a price before he starts to work or she starts to work. all of a sudden when the bill comes, you're not surprised and you don't have a bad reaction. Right? So each time I'm placing a trade, I want to make sure that I'm getting that agreement with my contractor, right? And I'm not getting a surprise bill at the end of the trade. And if I don't like the work order price, I can just buy a deeper pullback or size down or go with someone different, right? Which would be trading micros. So again, right? It's proactive, not reactive, and it's much easier to be proactive if I understand the risks that I'm taking and I'm happy with those risks. Hey, enjoy, Antonin. Sounds like a great afternoon. I got very similar plans here today. You know what, team, all things considered, we have missed absolutely zero tradable price action. I don't think we've done anything wrong here today. Maybe we could say it's bear flagging a little bit here. That feels a bit like a stretch. Is he yapping right now? I thought it was just Powell. Oh, okay. He didn't curse again, did he? There was a video going around. I don't know if it was real, but what are people doing? Yeah, seriously, Greg. I'm, not to give anyone any ideas, but I'm just waiting for some AI bot to call my dad, say that I'm in like a Turkish prison and scam them for money. I'm sure stuff like that is coming. Not to disparage Turkey or Istanbul, but that's coming. I'm worried about that. Yeah, yeah. I'll have to do my hair transplant somewhere else. Oh yeah, 100%. It's huge out there. Maybe. I've got a few buddies who did it. That's scary, AJ. That's terrifying. I did preface it by saying not to give anyone any ideas. So I don't I can't take any responsibility for that. I like that, Greg, from the blockchain. I like that. Yeah, so crude oil inventories day, traditionally just a really challenging day to trade CL. I just get a bunch of algo fuckery. Yeah, that stuff always scares me too. Yeah, so we just had crude oil inventories at 10:30. That's where the volume is coming from. The I don't know. Sometimes I get scared about like the way that ads get populated and stuff like that, and then other times like I get like emails from um like Amazon, and it'll be like I searched up for a ladder, right? Because I got to get something, and then all of a sudden it's giving you like, oh, you bought a ladder, maybe you want 12 other ones. You're like, oh man, like this isn't very smart yet. Yeah, exactly. Um, I wouldn't consider my style, Mike, to be scalping. I think that there are certain elements of it that can be that, because there'll be trades where you get micro moves, but I would consider scalping to be kind of looking for smaller based moves than what I look for. I wouldn't necessarily consider it that. I would still kind of consider myself to be a momentum breakout trader or a momentum reversal trader versus a scalper. But there are some similarities for sure. And there'll be times where I'll be in trades for just micro moments, but not my base intention generally. And maybe we can get those red to green breakouts here. Yes, looking a little bit stronger. Oh, I'm bored. Maybe here some. This has just been drift higher, drift lower, drift higher, drift lower so far. Yeah, and I'm not sure if I'll be able to talk myself into this. I don't think I've seen anything here yet that indicates anyone is clearly in control. Or at least I don't feel like I found the easy trade here yet. Weird sensation. No, I need a breakout from inside this consolidation range, right? All the breakouts I've seen today have not been super strong yet. So no, this independently enough is not enough. I want it to be a breakout away from the range, not inside. Yeah, not a strong enough candle close. So find enough shape, but it didn't close under the opening range. I don't want to break out from inside consolidation. I want to see separation away from consolidation and then to trade it. The other element here, right, is we've seen price action effectively get stuck at that 64. So that would probably be the most likely profit target, right? If we were to trade this here to the downside and then hoping that you get a bit of further follow through, that means we're looking at like, 30 points of range here. That's pretty challenging to be able to get the position sizing and the entry that you want, right? You'd be looking at a risk of like 8 or 9 points, maybe even less actually. Maybe like 7.5 points. So just from an execution perspective, excuse me, low probability. Nice work, Mark. Yeah, I hear that. It's a tough day, right? So very easy to have drained a tremendous amount of mental capital, or like a disproportionate amount. The mental risk to reward ratio here today probably a little bit skewed too. You know what? I actually am pretty happy with just being selective here. Even though it's a boring day and I'm yawning, which is never a good sign, I should be happy about not doing anything stupid. And it's better to sit on hands and not lose money than it is to chase action and be red. Because it's always on those days where you just like you look back at it later in the morning or in the afternoon and you're like just pure chop all day and you're like, why did I bother? It makes you feel like kind of an idiot. And again, right, being proactive, not reactive, right? I can avoid that like negative self-talk in the evening when I want ice cream to make myself feel better. I can avoid that, during the market or during the day by being deliberate, right? By acknowledging my biases, right? By being specific with what I'm looking for. And so now today, it's easier to fight off that Dairy Queen craving, right? I don't need to make myself feel better because of how I traded, right? Yeah, just treacherously. Well, and yeah, I don't think our read of the market has been wrong in any context here today. Gotten it right. It's just that the read that we've established is that it's choppy disaster. Kind of the you're right, but you're like, did I want to be? The answer's probably no. All right. Any questions here this morning, team? Any questions? Don't see myself placing any further trades. Yeah, it's been a grind day here so far for sure. A little absorption to the pre-market move. A little bit today, Mike. A little bit. But you know what? Watching paint dry is a lot better than watching P&L evaporate. So it's you win some, you lose some. $100. Deb, Mark trades a personal account. Problem with today's stream is I think I may have talked myself into ice cream. So we'll have to fight through that a little bit today too. All that talk of blizzards. Sounds good, Corinna. Enjoy. What do you mean by Top Step does MX for Trade of 8? Uh, the suggestions you mentioned though, Anthony, those would be my top three in general. So Tradeify, My Funded Futures, and Top Step. The difference. Oh yeah, okay. Maintenance. I got you. So the difference between all three of them is negligible. I will say that a little bit with my Tradeify account, I sometimes get like uh fills that don't exist, especially around my stop losses. So like if I'm within a couple points of my stop loss, sometimes I've seen the spread like widen artificially and stop me out, which I don't like. I don't know if that's a um trade debate issue, if that's a tradeify issue or whatever, but that's happened a couple times with my tradeify accounts. I don't have any recollection of that happening anywhere else. But all three of those companies, I have never had any issues with payouts or in the speed of payouts. So from my perspective, that's the most important thing. Basically, when I request my money, I want my money, and I don't want to have to wait 2 weeks or go through a bunch of hoops, right, to basically get it. So all three of those options, I would say, are great. Maybe a slight bias here right now to my funded futures because they have that promo, right, where it's buy one account, pass it, get the other account free. Yeah, if you ask a question here, you eco fuel saver, I will answer it. I try to take payouts as often as I can. Um, maybe on average, like every 7 or 8 business days, on average, something like that. Basically, if it's been a good Friday and I'm payout eligible, I will pay myself. That's pretty much the process. I always use Trade of 8 when I can. Send me a screenshot, Jen. Maybe you have the ticker set up wrong. Send me a screenshot of your NQ and ES. Yeah, so there's a lot of trade copiers that you can set up to be able to execute your trades. My general recommendation for scaling up your accounts is basically to add an account with each payout that you're able to generate, right? So as you pass an account, once you get your first payout, use some of those profits to buy a new account. Now you have two accounts. As you get your next payout, you're now going to be past two accounts, and then you're going to be working on your third. So basically, just adding an account with each, like basically reinvesting back into your business, right? Kind of the core concept there, and just building up your tolerance to trading that sizing, I think is also very valuable. At the moment, I trade with 9 total accounts. I don't feel like I need more. I'm also trading with like a pretty sizable personal account. So again, it's not like my huge I don't find it to be like a huge restriction. No, not really, Igor. I don't find it to be that bad. It's a lot calmer than executing was back when I worked institutionally. So like I'd be managing 15 to 20 trades at a time, and entering positions all over the place and all over the world. Um, so no, it's pretty normal. But like here's the thing with trade execution, right? There is no objective best way. It's just what's the way that's best for you, right? So for me personally, I don't trust that I just don't want to trust a trade copier to my personal account. I've said that before in the past. Um, but like I've just seen trade copiers glitch out and not work the way that I expect. And with prop firms, that's fine. Like they've got some workarounds and okay, worst case scenario, you're out your $150 or whatever it is in a bit of time. If I had a glitch with my personal account and it liquidates the family fund that I manage, and all of a sudden a couple million is out the drain, that's a beyond worst case scenario, right? Where complicating my execution is worth it to mitigate that risk. I am watching it. Not enough volume though, right? It's missing that outlier standard. And then it didn't close under previous low of day, right? So it's giving me a lot of reasons to maybe be pessimistic. Now on the 3 min looks a little bit better, but I think I'm still gonna talk myself out of this. And it's mostly because I'm just not convinced by anything I've seen here from the market. Alright. Again, those both look fine. Just the time of day, Aj, as well, right? It's not a super high conviction breakdown spot. Maybe if this was a mean reversion look, I'd be a little bit more interested. But historically, it's challenging for us to make new lows over the next 2 hours or so. All right, guys. Any other questions? Biggest amount of money? When I was working at Arain, or the hedge fund I used to work at, our position sizing was 40 million. So I'd be trading $40 million positions at a time. So like in a day, like if I were to flip short from like an max position long to a max position short, I would trade $80 million worth of shares. You mean institutionally? How would I do that without a trade copier? Is that what you're asking? Yeah, you just open up multiple windows. So, and each one is a different window, if that makes sense, right? So, one is interactive brokers, one is Top Step X, one is via Trade of You, Trade of 8. You can copy trade. There's ways to set up copy traders. Well, you don't have to use different brokerages, right? That's not the way to have to do it. But I use TopStep X because their internal platform, right, works well or works well enough. So that's fine. Interactive brokers, right, is my personal, right? So execute there. And then uh trading view or whatever is just all my trade evade accounts. Kind of. It's not that I'm like flipping through. It's just that I have a monitor dedicated to it all, and so all I do is just fill in the same execution rules, right, on all of my windows. So you just go through. Well, I see the reason I don't have that issue, Nautilus, right, is because I don't have multiple like trading view windows open, right? So I don't have a trading view logged in on one monitor and on the other. So like if I logged in say on like this screen here, right? I logged into my Top Step and then on my next one I logged into my Tradeify, I would have issues there. But because I've split it up between prop firms, I don't have those issues, right? So I get independent logins for each of them, and each of those logins have a market data subscription associated with it, right? That's paid for by the prop firm. So that's why I don't get that concurrent data warning. So you kind of have to group it if that makes sense. Yeah, I don't see myself placing any trades. No, I didn't take a trade here today. It's been a zero action day. The closest I got was on a CL move, which would have been this breakout here at 9:45, but it kind of just gave me a terrible reaction. So no entries, unfortunately, here today. Fine by me. So any other questions here, team? Any other questions? Again, it's not to say that the market didn't move, but I just didn't have an easy trade today. It wasn't easy. I didn't want it. Nice. What do you think so far? Well, fair enough. If you have any questions, don't hesitate to reach out. Any other questions here, team? All right. Well, good luck. It looks like a fine enough setup. The double fake outs, maybe, or the triple fake out would scare me a little bit. I would say, right? That's maybe not the best reaction. So if this was your confirmation, here's fake out one, here's fake out two, here's fake out three. 3 attempts now from bears to push and sustain that move lower. They've not been able to do it. So if they were strong, why not? What's changed? Right, you've got 3 failed moves to the downside. That's what it looks like. Now, doesn't mean you can't, like, it won't follow through. Doesn't mean that at all. But it potentially means that your breakdown thesis is early or not ready. And your buffer here right now is because of good entry timing, more so than a really strong thesis. Right. So you did a good job controlling your variables because you bought yourself a good enough entry to effectively have that insurance. But I would say that the reaction post confirmation has been suboptimal. Just my opinion. I don't have any money on it, so um, it's hard for me to speculate much more than that. Because it feels different once you have risk on, right? It just does. All right, team. Any other questions here? Any other questions? All right, sweet. So same deal like always, right? If you have any questions, hit me up outside of market hours. I'll do my best to get back to you as soon as I can. Otherwise, have yourselves a fantastic rest of the afternoon, And hopefully we have a little bit of a busier day there tomorrow. Zero trades here today, zero action for me. And honestly, don't really feel like I missed anything. It's been a really slow kind of bullshit market here today. So we're happy to have sat on hands and just avoided obvious mistakes. Have yourselves a great day, team, and I will see you all tomorrow. Peace.